I've set up rules for when I decide when and what dividend stocks to buy to add to my portfolio. I have this set up because there are so many options when it comes to looking at the overall market. You have hundreds, if not thousands of options. And when it comes to dividend stocks, not all dividend stocks are built the same way. So I set up these rules to kind of simplify things and make it so that I don't have to emotionally trade stocks based off of momentum or what people are talking about. But today I wanted to talk about a dividend stock that has become my top dividend stock that kind of breaks all of the rules that I have set up. And I wanted to explain how part of my position is down more than 500% since I opened it. Today we're going to talk about why Ford stock, ticker symbol F, is my top dividend stock for the next year and why it's become one of the largest parts of my retirement account. And I'm going to talk about some of the reasoning behind why I bought into it and why I am still bullish on it long term, even though recently things have not gone well for me on my trades. We're also going to talk at the end of the video about how I use options in addition to dividends to allow me to reinvest more money into the market. And I'm not using options like a buying options for a Wall Street bets type of thing. This is kind of similar to hedging your position, the way that options were originally meant to be used. Instead of trying to have a 1,000% return, I'm trying to lock in reliable profit just like dividends so that I can reinvest them back into the underlying stocks. So we're going to break down this video into three main parts. The first is I want to talk about what my dividend rules are, because for you to know about why I broke them, you need to know them in the first place. Number two, we're going to talk about Ford as a company. We're going to talk about its history, what it's done recently, and why I'm optimistic on the company recovering in the next couple of years. And some of the numbers are going to be a little off because when I made this video a week and a half ago, the stock is up like 20% since I made that video. So the underlying topics remain the same, just the numbers are not going to look as accurate because I'm kind of too lazy to update my numbers. And then finally, we'll wrap up the video talking about why I sell options and use the wheel strategy to reliably bring in income and some of the negatives that go associated with it, because people love talking about the positives, don't love talking about the negatives as much, and we're going to wrap up the video with that. If you made this far, please hit that like and subscribe button and we'll build wealth together. Okay, let's talk about my dividend rules. I try to keep them as simple as possible so that they can be applicable to pretty much everyone. You may have different thoughts on them, but these are the rules that I use. The first one is that it has to have outperformed the stock market since 2000. We're not buying these stocks just to, buy the name. We want them to have the track record of outperforming the overall market. And obviously everyone says past performances do not indicate future success, but they give you a pretty good idea of how the company's done for the past 20 plus years in a variety of markets. So seeing that the stock that we're buying has beat the overall market makes me feel a lot more confident in my positions, because if we're not going to beat the overall market, we might as well just buy the overall market. Number two is that it has to at least be a dividend aristocrats. Dividend aristocrats is a title given to companies that have raised their dividend payout the dollar amount, not the percentage yield, every year for at least 25 years. And then if you make it to 50 years, you become a dividend king. This really narrows down the amount of stocks that you can buy and gives you a much more manageable list of stocks to pick from, and has the track record, just kind of like the returns. You want to see that a company can pay out the dividend successfully. The worst thing that could happen is your dividend is too high, it's not sustainable, and then they have to cut it, because that's usually a death sentence to the long-term returns of a stock. Going along with that, number three is the dividend yield has to be below 4.5%. It's kind of an arbitrary cutoff that could be 4%, could be 5%, depending on who you talk to. It's just the idea that I don't want to be drawn into a dividend trap. I'll put a video up above right now talking about dividend traps, but it's the idea that a company's stock price has gone down by so much, and while the payout doesn't change, the yield based off of the current stock price goes up significantly. And it's very attractive to see some of these stocks that are paying out a 9, 10, 11% dividend, likely not healthy, so I try to keep it in that range. And then number four, this just goes along with my overall strategy, is that dollar cost averaging is a must. As long as the stock still fills out the rest of the rules, I will continue to buy and average in no matter what the current cost is, and same thing, the dividends should be reinvested. Okay, so let's talk about Ford in part two, to kind of talk about why it breaks all of the rules that I have and why I still think it's worth my time and my money to invest in it, even though it breaks all of those rules. So Ford as a company and as a stock has not done very well in the past 20 years. So rule number one is that it has to have outperformed the overall market since 2000, and Ford has not done that. I'll put up on the chart right now, this is how Ford has done with dividends reinvested since 2000. And as you can see, it is not close. Ford has actually gone down in value since that point, where the S&P 500 has returned 323% during that time. So you look at that, not great. But the thing that we're really putting my bull case behind is EVs. Pretty much anyone on the internet that's been following stocks has known the EV craze of the 2020s, 2021, with the rise and fall, and now rise again, of Tesla. Tesla was a stock that just kind of showed the overall stock market that EVs can be a profitable place to invest. So you've had all of these companies like Lucid, Rivian, stocks that have not done very well, But the difference between them is that Ford is a well-established company, and I believe in their ability to put out a high unit selling electric vehicle in the next couple of years, even though they haven't done that right now. I'll put up this graph right now that shows the growth in plug-in hybrids in the blue, and then in the green is the electric vehicles and how it's risen every year since 2013, and it's been pretty significant. So in the last year, you've seen a 55% increase in the number of total sales of electric or hybrid cars. So this market is continuing to increase, and Ford has the infrastructure set up to take advantage of that. But when you look at how many EVs they've been selling, compared to some of the major car manufacturers out there, it's not that much. It's only 0.39% of their total sales, so there is a lot of room to grow, and they have the infrastructure set up. They're one of the largest car companies in the world, but they just don't have the EV sales to back that up yet. And so they've come out with the Ford Mustang Mach-E, which was the electric Mustang, has not done very well since it's come out, and you may see that and go, okay, so why are you excited about this? This is a long-term investment. I am not expecting Ford to, triple in value in the next year. This is a long-term investment, and I expect them to be able to turn it around in the next couple of years. They're losing a lot of money when it comes to their EVs, and that's okay. They have the infrastructure and the rest of the business to kind of last during these rough times as they kind of figure things out, which is something like Rivian and Lucid don't have that backbone of their normal business to kind of carry them along as things are not going as well financially. So it gives them a lot more stability when it comes to the long term, and I expect them in the next 3 to 5 years to do much better. And Ford has come out recently and said that they expect to turn a profit with their EV space in the next 4 years. So 4 years is kind of the time horizon I'm looking at, and during that time, I expect there's going to be some ups, there's going to be some downs, and that's okay. Some of the news that's come out recently is that they have a plant that's going to be up and running in 2025 that will be able to produce 500,000 electric trucks per year. So the infrastructure is starting to get built, it's just not fully there yet, and I think this is early enough on where I feel good buying in. Even though the stock has not done very well for the past 20 years, I think this could be something that pushes them along for the long run. So now we got to talk about the dividend, because this is kind of a dividend channel at this point. Ford has an interesting history with the dividend. 2020, a lot of car companies cut their dividend and paused it. Ford is no exception to that. They paused the dividend, so they're not a dividend aristocrat because of that. I'll put up on the chart right now that shows the dividend payout. You can see that it paused for a bit as of 2020, and then it was reestablished, I think, late 2021. And at this point, they're paying out a 15-cent per share dividend, which comes out to, I think, a little bit more than 4%. So it's a really solid dividend for what it's paying out right now. They also had a special dividend, I think it was 65 cents per share, as a result of selling a bunch of their Rivian shares that they had. So this was just kind of a nice addition for something that I wasn't expecting. And so the dividend payout, the yield, is high enough where I see the 4%, and I get pretty excited because I think that the stock price can go up significantly. And if it doesn't, the dividend payout is large enough to keep me interested if it takes longer than expected to kind of get off the ground. And when you look how Ford has done since 2020, a time when they've kind of pivoted to the current focusing on EVs, they've actually outperformed the S&P 500 by a pretty significant margin, 12.5% versus 10% on an average annualized basis. So a couple of percentages every year really add up over time. And it's shown that the company has done well recently compared to what it's done, since the turn of the millennium. So with that dividend payout of 4.16%, it's pretty attractive. Plus the idea that the stock price has been kind of bouncing and hovering between $11 and $14 makes it really attractive for someone like me to sell options on it. Selling options is risky. It's the idea of you're kind of putting yourself at the mercy of the stock price to lock in reliable profit. And this goes along with my philosophy when it comes to dividend investing, where I'm bringing in reliable income and then reinvesting it back into the market. So I'm taking that premium from selling these options and then buying additional shares because I believe in the company long term. I just think it's going to kind of bounce around and hover between my range. So it allows me to bring in profit, and I'll put up and kind of shows how things have gone since I started doing this in December of 2022. I've been doing this since early 2020. I just haven't done as much recently. This is a stock price that is relatively cheap. So you're able to buy 100 shares for $1,400 compared to other stocks where you're going to need 10 grand to get involved with options. So it allows me to buy additional shares of the stock while it kind of hovers in that range. When you're selling options, especially covered calls, it means that you're willing to sell your shares at a given price. So I was able to sell, it's up to $14. So I'm gonna have to sell my option or my contract at the $12 mark and miss out on those $2 of profit. But that was something that I was okay with at the time because I was able to buy additional shares, and I didn't expect it to go up as high as it did, and that's fine. When you look at how I've done, the numbers are kind of skewed because of how high it's gone up recently. But since January of this year, I've been able to bring in 12% from the options that I've sold and around 3% from the dividends. As a result, I'm bringing in 15% versus the stock price was up 6.08% in 2023. Obviously, that number is much different. This is kind of a strategy that I'm using to kind of hedge against volatility. If the stock price is going to go down significantly and a stock that I'm willing to hold for the long term, I can sell options on it and I'm totally okay with that. But I'm also okay with locking in that profit and reinvesting those dividends in case the stock price does go up significantly like we've seen right now. Selling options is really complicated. When you look at the options market on TD Ameritrade, which is the broker that I use, it's pretty intimidating. You look at something like a Robinhood, I'll put that up right now. It's a lot easier to understand how it's going, but if you don't know what you're doing, it allows you to make huge mistakes compared to just buying shares. So I think it's something that a lot of people should try when it comes to paper trading, but not many people should be selling options unless you really know what you're doing. And I've been very curious to hear if you've ever sold options and how it's gone for you in the comment section down below. So this was a discussion on Ford, ticker symbol F, and why it breaks all of my dividend rules, and I'm okay with that. This is a stock that's very different from the rest of my portfolio, and the idea that I'm buying it because of the dividend, as well as the long-term potential of the company based off of its EV business. It's not something that's going to, fly off the shelves right now, but I think Ford, based off of its infrastructure that it's set up and is building currently, is going to be in a great position to take advantage of that going into the next 5, 10, 15 years. And because I think it's going to take a while to get off the ground, I've been selling options on it, and that's allowed me to do pretty well and bring in additional income like my dividends to reinvest back into the market. So it's kind of a strategy that I really like using, especially on stocks that I don't mind holding for the long term. And I'm very curious to hear what your thoughts are and if you think that Ford is an interesting buy for the next year in the comment section down below. Thanks for watching. My name is Andy. If you made it this far, please hit that like and subscribe button, and I will see you in the next video. Thank you for watching.